Welcome back. You're with us on this special edition of Bazaar Morning Call. We're coming to you from our newsroom today, wishing all our viewers a very, very happy Dhanteras. Well, let's get started with the stocks to watch because it's a long list out there today. Lots of earnings to go over. We have Surabhi Sutaria to kick things off with Zee. There are earnings and then there is the buzz around what's happening with Mr. Puneet Goenka. So I don't know what the stock is going to react to, but Surabhi, tell us more.
For earnings, the numbers are better than expectations. You know, the revenues were up 20% on a year-on-year basis. The ad revenues, that was down 3%, but the company expects the ad revenues to start kicking in from H2. The subscription revenue, that was up 8% on a year-on-year basis. And the real kicker has come from the other sales and services. That is up 3 times at 571 crores. The EBITDA is up 6%. The margins have come in at 14% versus a poll of 11%. So clearly the numbers are very strong. The next trigger, as you said, is also going to be on the completion of the merger. Now this morning, a Mint report suggested that Sony views the allegation against Puneet Goenka as corporate governance issues and they want to play safe and name NP Singh as the head of the merged company. The report further said that currently the integration talks among the two companies are completely halted. On the other hand, Puneet Goenka yesterday on the conference call indicated that they recognize the value of the merger, of what the merger holds, and focus remains on unlocking value for all the shareholders. They are in active engagement with Sony on the implementation of the scheme and they expect the merger to be completed in the next few weeks. So for now, based on the numbers, going with a green for Zee.
Okay, all right. Thanks a lot for that, Surabhi. Let's hop across to Abhishek, who's here to tell us about Muthoot Finance. Morning, Abhishek.
Morning, Nigel. So it looks like, competition is again taking away the market share towards banks from NBFCs, that is, gold financing NBFCs, because the numbers are below poll, the net interest margin is at 5-quarter low, and the AUM growth is weak on a sequential basis. So AUM growth is about 20.6% YOY and just 2% quarter-on-quarter. So sequentially, the growth is the weakest in last 3 quarters. Gold AUM growth is at 19.5% YOY and about 2.24% sequentially. The gold prices are down 0.6%, so that could have also had a small impact on the AUM growth. In terms of net interest margin, it's at 5-quarter low of 10.88% versus 11.04% YOY and about 11.6% in the previous quarter. The interest costs have actually increased a lot. That's interest expense has grown by more than 8% quarter-on-quarter. Amongst their subsidiaries, the HFC subsidiary, the net interest margin declined anywhere between 60 to 70 basis points sequentially, and the Belstar MFI, the AUM growth was strong at 53.25% YOY and about 12.4% sequentially. In terms of numbers, both the NI and PAT is below our poll. Back to you.
Abhishek, thanks very much for that. Aurobindo Pharma is the other one which reported numbers look better than expected. Ekta?
Definitely. The Aurobindo revenue was up 26% versus expectations of 20% growth. Margins 19%. Street was anticipating 17.4%. Multi-quarter high for margins, and profit also better than expectations. Margins expanded on a Q-on-Q basis as well. US revenue has topped over $400 million. So again, multi-quarter or maybe the highest level that we've seen for the US markets. Eugia, which is the injectables business, recorded sales of $91 million. Europe growth markets, antiretroviral, which is basically AIDS drugs, etc. API, all of those segments grew in double digits as well. They have a call at 8:30 a.m. so it'll be important to hear the commentary, but nonetheless, based on these numbers, the stock should be in the green.
Okay, that sounds good. Ekta, thank you very much for the details there on Aurobindo. Vivek, hi, morning. You're tracking Torrent Power and RVNL. How are the numbers?
Well, good morning. Steady set of numbers from Torrent Power, different segments of the company actually kicking in to aid the revenues this time around. Talking about the revenues, higher by 3.8%, coming in at the 6,960 crore mark. Now, what's actually worked for the company this time is that given that the short-term power market was quite robust, what's actually happened is that the merchant power sales has increased from the gas-based power plants. Along with that, the licensed distribution business has also helped. But on the other hand, what's not worked for the company this time around is that the lower net gain has come in from the trading of LNG, and along with that, finance costs have also spiked up. Now, talking about the EBITDA is up by 5% on a year-on-year basis, profitability up by 10%. So expect slight green on the stock in today's trading session. On the other hand, when you're talking about RVNL, it's been an operationally weak quarter for the company this time around. Revenues flat on a year-on-year basis, slightly above the 4,900 crore mark, but operational weakness, leading to an EBITDA decline of close to 5.6%, and margins have, contracted 30 basis points sequentially. Now, despite that, aided by higher other income, aided by lower tax rate, profitability has jumped up 3.4% on a year-on-year basis.
Thanks a lot for that, Vivek. Let's hop across to Mangalam. He's here to tell us about a few stocks. I think AB Fashion is on his radar and Campus as well. Hey, Mangalam.
Good morning. So, for AB Fashion, it's the seasonal weakness and the festive season shift that has impacted their overall numbers. While the revenues have grown just about 5%, the EBITDA has declined by about 18.5%. Margins have compressed as well. And on the bottom line, the company has posted a loss of 200 crores, and this compares with a profit of just about 29 odd crores. What's caused this loss? One, lower EBITDA. Secondly, the depreciation has been higher. They've consolidated the business of TCNS Clothing as well. And finance costs, that's doubled year on year from 100 crores to around 200 odd crores, and that would be another cause of worry because the overall borrowings of the company have increased from 2,000 odd crores to close to 4,000 crores as well. So, that should keep the stock lower. On the outlook as well, the management has spoken about tough competition coming in the value fashion space itself. Campus Activewear as well, very poor set of numbers coming in, 22% decline in their revenue, 44% decline in their EBITDA, and the net profit is all but eroded, a 98% cut out there. The stock has corrected about 50% from its 52-week high. The company has alluded this weakness to their channel correction, at the same time difficult macroeconomic environment, but you see no respite for Campus. Expect that stock to be in the red along with AB Fashion Retail as well.
All right. Thanks very much, Mangalam, for that. Piramal Enterprises numbers don't look good at all. Abhishek has got more. Abhishek.
Well, it's a very weak quarter for Piramal Enterprise. Their operating profit is down more than 45% YOY and about close to 5% on a sequential basis. The net profit is at a mere 48 crore, which is down more than 90% quarter on quarter. In the previous year, same quarter, there was a loss of more than 1,500 crores. Asset quality stable. Gross NP ratio is now at 2.7% versus 2.8% in the previous quarter. Net interest margin has expanded both YOY and quarter on quarter. Robust disbursals growth more than 57% YOY and about 9.5% sequentially, but this has not translated into AUM growth. It continues to remain weak on a YOY basis at a mere 5% YOY and about 4% sequentially. So weak PNL may not bode well with investors in trade today. Back to you.
Okay, got that. So Piramal Enterprises is not exactly lighting up, the report card. Back to Mangalam. Mangalam, how's Lemon Tree and Senco looking?
Well, Lemon Tree is not looking too bad. Yes, the revenue has grown 16% and the EBITDA has grown just 9%, which means there's a margin compression. But the margin compression is largely on account of planned renovation expenses that the company had alluded to, and also pre-operative expenses of the Mumbai Aurika, which is likely to open. So that would aid their revenues going forward as well. Internals in terms of occupancy and average room rate look good too. So expect the stock to see some green in today's trading session. Senco Gold, stellar set of numbers coming in. The revenues of the company have grown by 26%. The EBITDA has grown by around 22 odd percent. The net profit has grown by 35%. If you just take a look at Senco Gold's stock price move over the last 2 months, it's up 75 odd percent. So one would be tempted to say, okay, there could be some profit taking here. But on Dhanteras Day, no one sells gold stocks. So Senco Gold, green.
Oh, absolutely. Nigel, it's gold. And the guys who are selling stuff made of gold. That's what's really sparkled this year, right? Hasn't it? On the equity side and on the metal itself, on the yellow metal. Okay, thank you very much, guys, for joining in and filling us in on all the action as usual. Wish this entire gang a very happy Dhanteras, and we're going to come out and celebrate, so keep some goodies for us as well. We'll do that. Let's quickly recap our list of top stocks to watch as well. The ones that have positive news flow today are Zee Enterprises, Zee Entertainment, Aurobindo Pharma, Torrent Power, Lemon Tree Hotels, and Senco Gold. The ones that have negative news around them are Muthoot Finance, RVNL, Campus Activewear, Aditya Birla Fashion, and Piramal Enterprises. Speaking of all the action, I don't know if she's talking about gold or not, but our in-house commodity queen, Manisha Gupta, is joining in. Manisha, I wish you a very happy Dhanteras. Tell us, what's the action?
A very happy Dhanteras to you as well. And before I get to price action, if you bought gold last year, gold was at 50,000 rupees. It's at a 60,000 rupees right now. So you're sitting in a neat profit of 20% there. And the same goes for silver as well, where we were at 60,000 last year. We are at 71,000 now. So 20% of gains onto that one as well. So it really is a glittering Dhanteras and Diwali for people who bought gold and silver in the previous year. We are looking at so many uncertainties in global markets. That clearly has been supportive. And what is the icing on the cake right now is that you have seen the gold prices go for some profit taking, as there has been some hawkish commentary from the central banks. The weakened geopolitical risk from Israel-Hamas war also seems to be weighing on. So the gold prices are trading at 3-week lows right now, which is a good buying opportunity. opportunity. But also what has seen a decline is the crude oil prices, headed for a third weekly decline. Easing concerns on supply disruptions from Middle East and demand uncertainties coming in from US and China seem to be weighing here as well. So a second straight day when we are looking at the Brent prices trading below $80 per barrel.
Oh, yes, absolutely. And that is the key positive global cue that we've picked up this morning. Manisha, thank you very much for that. See you in office in your festive attire very, very soon.